Welcome back, everyone, to another deep dive. This time
Oh,
we're doing something a little different. We're going to be looking back in time just a little bit.
yeah.
We're going to be taking a look at two PitchBook reports from late 2024.
Okay.
One is the Q3 Emerging Tech Indicator, and the other is the Q4 Venture Monitor.
Right.
Now, you might be saying, wait a second, why are we looking back at 2024
Yeah.
when we're already in 2025? And well, the reason for that is because
Yeah.
these reports can actually give us some pretty good clues for startups
Yeah,
as they try to navigate the landscape in 2025.
absolutely.
We're going to be taking a look at those today. And just to remind you,
Okay.
when we talk about the emerging tech indicator, we're talking about something that tracks investments by top VC firms.
Yeah.
So these are the folks that are,
Right.
supposedly
Yeah.
putting their money where their mouth is.
Yeah.
They're the ones that are betting on the future.
Right.
And this report gives us a little bit of a sneak peek into where they think the future's going.
It does.
So without further ado, let's jump right in,
Yeah.
because there's actually some pretty surprising trends that emerged from these reports.
Yeah.
And we're going to talk about the big winners,
Right.
some of the sectors that are really heating up, and some of the things that maybe you should be paying attention to if you're in this startup world.
Absolutely. So I think one of the things that really jumps out
Yeah.
from these reports is the sheer dominance of AI and machine learning.
Yeah.
I mean, even back in Q3 of 2024, the emerging tech indicator
Right.
was clocking something like $2 billion invested across 42 deals
Wow.
in just that quarter alone.
That is amazing.
Yeah, that's a ton of money flowing into that sector.
AI was really the talk of the town last year.
It was.
It was everywhere you looked. But I think what's really fascinating is not just the dollar amount,
Yeah,
but the kinds of companies that were attracting these investments.
right.
You had companies like Safe Superintelligence, which was founded by an OpenAI co-founder,
Right.
raising a record-breaking $1 billion.
$1 billion.
Yeah, I mean, that is a serious statement about the race for general intelligence, don't you think?
Oh, absolutely.
Yeah.
I mean, when you see that kind of money flowing into a company like that, it's
Yeah.
definitely a signal that
Yeah.
this is where a lot of smart people think the future is going.
Yeah, and that's not even the only example, right?
No, not at all.
You had World Labs securing $230 million
Yeah.
for their spatial intelligence platform.
Right.
This is sort of another clue
Yeah.
as to maybe where AI is going.
Right.
This idea of sort of AI understanding the physical world around it,
Exactly.
being able to interact with it.
Yeah, that's a whole other level.
Yeah, it's pretty mind-boggling to think how quickly things are moving
It is.
in that field. But one of the things that the reports also highlight
Yeah.
is the impact that AI is having on investments beyond just the tech sector.
Yeah, that's right.
And this is something that you've talked about before.
Yeah, you're starting to see a surge in AI-powered SaaS solutions
Right.
that are attracting investment. Venture debt strategies are also being shaped by AI.
Oh, interesting.
And even corporate venture capital is laser-focused on this area.
Wow. Oh.
Yeah, so it's clear that AI isn't just a trend.
Yeah.
It's a fundamental shift that's really going to reshape entire industries.
Yeah, and that actually brings us back to, I guess, the big picture that was revealed by both of these reports.
Yeah.
You've talked about this outlier effect before.
Right.
And that really was kind of in play here with the AI boom.
Yeah, especially those mega deals like XAI's $6 billion round in Q2 of 2024.
Right. $6 billion.
I know.
That really skews the numbers, doesn't it?
Oh, it does. It creates a bit of a statistical illusion. It
Yeah.
makes it really crucial to dig beneath the surface and see what's happening beyond those headlines.
Right.
But when you do that, what you find is that even though there was a general slowdown in the market, there were some really positive signals emerging.
Oh, interesting. Like what?
Well, for one thing, the Fed was cutting rates,
Right.
which signaled a more favorable environment for startups. And there was also the potential for a more M&A friendly landscape,
Right.
which could have created some exciting exit opportunities for a lot of companies.
Yeah. And speaking of a lot of companies,
Yeah.
the report refers to something called VC-backed inventory.
Yeah.
And apparently there were over 58,500 companies
Wow.
in that inventory.
That's a lot of companies.
It is a lot of companies. And I guess that creates both opportunity and pressure, right?
It does. It's like this pressure cooker of innovation
Yeah.
with everybody trying to find their way to the top.
Yeah. Well, speaking of finding their way to the top, let's talk about some other sectors that seem to be doing pretty well.
Okay.
Biotech, for instance, had a decent showing,
Yeah.
especially with Metsera raising a $350 million Series A
Right.
for their obesity treatment research.
Yeah.
Does that mean that investors are starting to have a little bit more confidence in biotech?
It's certainly possible. Okay.
I mean, Metsera's success could indicate a growing appetite for investments
Right.
in companies that are tackling these kind of big,
Yeah.
major health challenges.
Yeah, right. And then there was fintech, which kind of remained stable,
Yeah.
but with a noticeable shift in focus, I think.
Yeah, definitely.
You had companies like Slope raising $65 million for business payments.
Right.
You had Coast pulling in $40 million for fleet card management.
Right.
And Thatch getting funding for their health-focused financial platform.
Yeah.
What do you think is driving this move towards these more specialized fintech solutions?
Well, I think it really reflects the evolving needs of businesses.
Okay.
As the fintech landscape matures, you're seeing a move away from those kind of one-size-fits-all solutions.
Right.
And more towards platforms that are designed to address specific pain points.
Yeah.
Within particular industries, it's kind of like
Yeah.
the difference between a general practitioner and a specialist.
Right.
Sometimes you need that focused expertise. Yeah. And speaking of specialization, we even saw this in Web3 and DeFi,
Oh, yeah.
which a lot of people thought were dead in the water.
Right.
But there was a little bit of a resurgence there.
Yeah.
Story Protocol and ID Planet each raised $80 million.
Wow.
Could this be the beginning of a Web3 comeback?
Well, it's hard to say for sure,
Yeah.
but the underlying technology of Web3 is undeniably powerful.
Right.
So maybe the bear market just kind of weeded out the weaker players
Yeah.
and left room for companies with genuinely innovative solutions to emerge.
Right, like a forest fire, clearing out the underbrush
Exactly.
and allowing new growth to flourish.
Yeah. And speaking of flourishing,
Yeah.
DevOps continues to attract a lot of funding.
Yeah, I noticed that companies like Mechanical Orchard and Port
Right.
both secured pretty substantial rounds.
Yeah, they're both focused on developer productivity.
Why is that such a hot area right now?
Well, think about it. In a world where software is increasingly central to everything, developer productivity is absolutely paramount.
Right.
These tools help companies streamline their development processes, get their products to market faster,
Yeah.
and ultimately stay ahead of the curve.
Yeah, it's all about speed and efficiency these days, isn't it?
Absolutely, in this fast-paced tech world.
Yeah, but I mean, it's not just about the mega trends, right?
No, it's not.
I mean, there are opportunities beyond AI and Web3 and all that.
That's right.
You know, we saw some decent activity in e-commerce,
Yeah,
health and wellness tech, data tech,
right.
proving that, there's still room for innovation
Absolutely.
in those areas.
Innovation isn't confined to just the headlines.
So there's hope for those of us who aren't building the next AI unicorn.
Absolutely. Sometimes the most valuable solutions
Yeah.
are found in those less explored corners of the market.
Yeah, it's good to know that there's still hope for the rest of us.
Yeah.
But let's face it, the reports also kind of paint a challenging picture
Yeah.
of the funding landscape,
That's
especially for startups that are seeking those later stage rounds.
Yeah. One of the key trends we see is this widening gap between the median and the average deal sizes,
Okay.
especially for Series C and beyond.
So that means competition for those big rounds is even tougher.
It is more intense than ever.
So what's the secret sauce then?
Well,
How do startups stand out in this kind of crazy funding environment?
for starters, investors are becoming a lot more discerning. They're not just looking for a cool product anymore.
Right.
They want to see a really clear path to profitability.
So it's not just about growth at all costs anymore.
No, it's about smart, sustainable growth.
Right. So you got to have a good business model.
Absolutely. Demonstrating a sustainable business model is crucial.
Yeah. And it's not even just about the numbers either, is it?
No, it's not.
I mean, you've got to be able to tell a story.
Yeah.
You got to be able to articulate your vision.
You have to inspire confidence.
Right.
You have to show them that your team has the expertise and the grit to actually make it happen.
So it's kind of a combination of hard data
Yeah.
and compelling storytelling.
Exactly.
And then there's the issue of time.
Right.
Both reports talk about how the time between funding rounds is getting longer.
Yeah, it's exceeding 2 years for Series C and later.
Wow. So you've really got to be patient if you're a startup these days.
More than ever, startups need to be prepared for these longer fundraising cycles.
Right. And that means being really smart with your burn rate.
Absolutely.
Yeah.
Make sure your runway is long enough.
Yeah. No more move fast and break things.
Not when it comes to finances.
Right.
Fiscal discipline is absolutely paramount.
Yeah. Well, speaking of discipline,
Yeah.
the reports also show that median pre-money valuations are actually going up,
Right.
even as the number of deals is going down.
Yeah, this is kind of a double-edged sword.
Yeah. How so?
On the one hand, it shows that investors are still willing to pay a premium for high-quality companies.
Oh.
But on the other hand, it means that their expectations are higher than ever.
So you get that big valuation, but you better be able to deliver.
Absolutely.
And then just to complicate things even further,
Right.
we're seeing a decline in crossover investor participation.
Yeah, particularly in those later stages.
And just to remind folks, what are crossover investors again?
So those are the investors that typically bridge the gap between the private and the public markets.
Right. So they're the ones that are kind of getting ready to take you public.
Exactly.
And if they're not there, that means you got to look for other funding sources.
You do. And this is where building those strong relationships and a really robust network becomes absolutely crucial.
So don't wait for them to come knocking on your door.
No.
Go out there and find them.
Exactly.
But it's not all doom and gloom, is it?
No, it's not.
I mean, we are seeing some positive trends.
We are. For example, we're seeing a rise in corporate venture capital.
Right. Especially in AI.
Especially in the AI space.
So those partnerships and strategic investments from corporations could be a good option for startups.
Absolutely. Corporations are increasingly looking to tap into the innovation that's happening in the startup world.
Right.
And strategic partnerships can be a win-win for both parties.
And there's also venture debt.
Yeah.
Which is becoming more and more popular.
It's true. Venture debt is on the rise.
Okay.
But access is likely to remain concentrated among those top-performing companies.
So they really want to see some traction before
They do.
they're going to give you that money.
Investors want to see strong growth and a really solid track record before they're willing to extend debt financing.
So data is king when it comes to venture debt.
It is. They want to see tangible evidence of your traction.
Right. You got to be able to prove that you're doing well.
Yeah, which means tracking and measuring your progress really meticulously.
Yeah. Well, so far we've been talking a lot about kind of the national picture.
Right.
But what about regional differences?
Well, both reports actually highlight a growing trend that's been developing for years.
What's that?
The increasing concentration of investment in those major tech hubs,
Right.
like the Bay Area, New York, and Boston.
Yeah.
And the Q4 Venture Monitor actually put some hard numbers to this trend.
Huh.
It shows just how dominant the Bay Area really is, both in terms of deal count and deal value.
Yeah. I mean, those ecosystems are just so strong.
They offer undeniable advantages in terms of talent, resources, and networks.
Yeah. So what does that mean for startups that are outside of those hubs?
Right.
Are they just out of luck?
Not necessarily. While those hubs do offer a certain advantage, they also come with higher costs and much fiercer competition.
Right.
So startups in other regions really need to be creative in leveraging their unique strengths and differentiating themselves to attract investment.
So it's about finding your niche and what makes you stand out.
The crowd, and with the rise of remote work and the increasing importance of those digital networks. Location is becoming less and less of a barrier to success.
So there's hope for those flyover states.
Absolutely. Innovation can thrive anywhere with the right combination of talent, vision, and determination.
Yeah, and I guess these reports, even though they're looking back at 2024, they still offer some really valuable insights.
They do.
For anyone who's trying to navigate the startup world.
Regardless of location.
It's pretty amazing how much we can learn from looking back, isn't it?
It is.
It seems like these reports from late 2024 are still really relevant.
Oh, yeah, definitely.
For startups, even in 2025.
Yeah.
So as we kind of wrap up our whirlwind tour here, what are some of the key takeaways that our listeners should keep in mind?
Well, I think the first takeaway is the importance of looking beyond the headlines.
Okay.
You know, the AI boom was a big story in 2024.
Right.
But it's really crucial to understand the nuances of the market and not get swept up in the hype.
Right. So don't just chase the shiny new object.
Exactly.
Make sure it's a solid investment.
Yeah.
And speaking of solid investments, it seems like investors are really laser focused on sustainable business models these days.
Absolutely. They're prioritizing that over rapid growth at all costs.
Right. So you really got to have a solid plan
for
turning your idea into a profitable business.
You need to be able to demonstrate that clear path to profitability.
Yeah. And don't forget about the importance of storytelling.
Oh, yeah.
It's not just about the numbers anymore.
Right.
You got to be able to craft a compelling narrative that showcases your vision, your team's expertise.
Absolutely.
And your ability to execute.
You got to be able to capture the attention of those investors.
Yeah. Well, it seems like the funding landscape is constantly changing.
It is.
So startups really need to be adaptable.
They do.
And resilient.
Yeah, be prepared for those longer fundraising cycles.
Okay.
Explore alternative funding avenues like corporate venture capital,
Right.
strategic partnerships,
Yeah.
and don't neglect the importance of really meticulous data tracking.
So you really got to be on top of your game
You do.
if you want to succeed in this environment.
Absolutely.
Well, these reports from late 2024, they've given us a lot to think about.
It has.
But it's important to remember that the tech landscape is always evolving.
It is.
So don't let these reports be your only guide.
Right.
Use them as a starting point for your own research and exploration.
Yeah.
The future of tech is being written every single day.
It is.
And you know what? Each of us has the power to contribute to that story.
Absolutely.
Well, it's been great chatting with you about these reports.
Yeah, it's been fun.
I always love looking back and seeing how we got to where we are today.
Yeah. It's fascinating to see how those seeds were planted.
Yeah. Well, on that note, I think we'll wrap up this deep dive.
Okay.
Thanks for joining us on this journey through the emerging tech investment trends.
Thanks for having me.
And remember, the future is full of possibilities. So get out there and make your mark on the world.